Hello traders, my name is Greg Horat and welcome to a new video analysis in which I will cover Euro, Cable, Dollar, Swiss Dollar, CAD and Crude Oil. I want to give an update on Euro Dollar. As you know, last week I mentioned that we may see a reversal to the downside. Clearly this has not been the case. Euro is the strongest across the board, so I think it's very important to give you an update on the new midterm outlook that I'm observing here. On euro dollar. So firstly, monthly charts, no real changes here. I still think that there is possibility that we will see a new drop for a wave 5 within wave C of these larger three waves of decline. Okay, also, as I think that I already mentioned in one of my old videos, that this wave 2 was quite deep and complex, so looking for wave 4 now that can be still in progress is actually not so bad thing, because fourth waves are normally also complex and sometimes even larger and more complex than structure within wave 2. Okay, so this pullback was actually deep in wave 2, so we may see something more sideways here in wave 4, which is clearly the case for the last 2 years or so. So I made a new count on the shorter term time frame. Actually, on a daily chart here I'm looking at a triangle formation are still in progress. So despite the fact that euro dollar is rising significantly over the last few weeks, I still think that this lag can be corrective. Okay, so even as you know, we're tracking different structure on a higher time frame before. We are still looking for these short-term levels to be very similar. Okay, what I mean by that is that we may see a reversal or limited upside around current levels. Why? Because if we are in a triangle formation, then this lag is subwave C. Triangles are structured by A, B, C, D, E subwaves, and we are still only in the third leg of this structure then. Also, there was a lot of noise here around these levels. If you look back here, ups and downs, so it looks like some pivot point of the price action that was seen in 2016. Also, there's a 61.8% retracement of this wave B decline, and then we have also this trend line. Actually, the correct trend line would be if you would connect starting point of this black wave A and end point of a triangle, which I think it occurred in subwave B. Okay, so that would be actually correct labeling. So we are at this resistance now. The second trend line, which is also very important, I believe, it's this. If you connect high of this 1.1713 actually and 1.1620, so this would be next trend line that I would pay attention on. Okay. Also, I think that this candlesticks could tell us a lot more in the coming weeks. Notice that actually we have seen a nice sell-off each time when market formed a spike on a weekly basis. Okay, so weekly close price, as you know, it's very important to confirm, to tell you where the market could be following, what market could do in the next week. Okay, so it was a nice spike here in August of 2015, then we have seen decline, and then in May of 2016, and then again in November 2016. So definitely expect something to happen similar in 2017. Okay. Also, as I said, we are this trend line, so maybe this zone, which is what, 200 pip zone, we may expect some kind of a spike. If we will see a spike, okay, then this would be an even better indication that wave C has finished and that we will see wave D drop, then wave E pullback, and then move to the downside. Alternate scenario is that we are here in a flat correction actually and another triangle. So as you know, flat corrections and running triangles are have the same parts of the first substructures, because they, in the triangles, you see a free wave move for a wave A, then you see a free wave decline for a wave B. Okay, and here you also see a free wave move up for wave A and also free wave decline for a wave B. The only difference is that wave C in flats will tend to retrace and spike out above wave A highs, which means you would expect a 5-wave rise before market will turn to the downside. So it's really important to keep an eye on the short-term price action and these levels that are highlighted. If we'll see a reversal down in 5 waves, okay, then this will be quite strong indication that we will stay trapped in this triangle formation. So generally speaking, euro dollar is really not giving us any, despite strong price action, is not giving us any real solution to regarding the direction. There's still a sideways price move, okay, which typically occurs after this strong move, a strong sell-off that occurred in 2014. Now we will take a look on cable. Cable, as we said, is trading in wave C of this wave 4. I'm looking at some resistance levels here, and it looks like that this pivot point of this previous wave 4 can be triggered before market may turn to the downside. I would not be surprised if we will not see a test of this level right there, which is actually a termination point of wave 4 of a lower degree. But notice that wave 5 here was very extended, quite strong. Okay, so normally in such cases on a pullbacks you will not see a retracement back to the ending point of the previous wave 4, but maybe at the starting point, which was here, or to the pivot point. Okay, so I would not be surprised if we'll see a reversal earlier to the downside and not tested this 1.346 level. Also, the 4-hour chart suggests that we can see more upside. I updated this one for you right now. I thought that we could see a weakness here, but because we just continued sideways for the last 48 hours, definitely it's important to listen to the price action and not ignoring the facts. The fact is that this is the personality of a corrective move, so it looks to me like a triangle, and we may see a break into wave 5 by the end of the week that can hit then this equality level compared to wave 1. As you know, if wave 3 is extended, then wave 1 and 5th wave can be very similar in distance. Also, dollar Swiss broke to the downside on a daily chart here. Actually on the 4-hour chart we can see that price is trading below wave D level, so now treating this next support here, which I believe it will be spiked out before reversing to the upside. I made a new wave count here, which is actually a triangle placed, a running triangle placed in a wave B. And the reason why I decided so is because this fall is really getting extended, really aggressive, so it fits nicely into an impulsive price action, which definitely is wave C. Okay, it's a motive wave actually, but it can have an impulsive structure as well. So I'm looking for wave C drop to complete wave E at this lower trend line. Notice that I connected here a trend line from May of 2015, then you have here a spike in May of 2016, then you have a spike low here in when there was a US election in November 2016. So maybe this trend line will be retested and then turn to the upside. What really matters is that this pattern here was a triangle. Okay, so if it was a triangle, then we know that we are now in a final leg down, final push before we may see then a new change in trend. Okay, so watch out for this support line and a potential. Now invalidation level would be here at this wave C actually. So we have room for much more weakness before this whole structure, whole triangle count would be invalidated. Now this wave B, the triangle wave B, actually is part of this ongoing corrective recovery from 2011 lows, which can be made in 7 legs. First 3 legs, then you have a wave X, and then another wave A up, now sideways price action for wave B, and then you can expect wave C to the upside. So you can see that this actually fits very nicely in line with our view on euro dollar. Now let's take a look also on dollar CAD real quick. Now dollar CAD is turning slightly to the downside from this 100% Fibonacci equality level. It's actually can be a wave C reversal zone compared to wave A. Also, this is a second zigzag then of this complex corrective recovery. What really matters here on this dollar CAD is that previously in 2016 we have seen a nice clear 5 waves of decline. So it was a strong move down in what, 3 months or so, while we are now correcting for almost a year into with a much slower pace. Okay, so to me it looks like a correction, a counter-trend move. We also have plenty of overlaps. There's no way to count this in impulsive fashion, which means that this recovery is likely going to be temporary and that we are expecting a reversal. But before we may call a top in place of wave B or wave 2, we definitely need the 5 waves of decline. Now, unfortunately, that's still not the case here. On the 4-hour chart, we have been looking for this reversal down in 3 waves, as you know, and we are now testing this lower trend line of this current channel. So if these trend lines will stay in place and if we see a reversal back towards the upper side, then this would be a confirmation that this was just a temporary pullback and that we are going to a new high, which means for higher levels in wave B or wave 2, which could then even test this upper parallel trend line. If on the other hand we will see a reversal by the end of the day, maybe tomorrow, if price will stay sideways with a sharp decline, with aggressive sell-off beneath the lower trend line of this channel, then this would be seen as an aggressive sell-off that could fit into wave 3 towards 261.8%. Okay. Also, crude oil has a strong impact on Canadian dollar, as you know. So last week we were looking for higher prices on crude oil. Actually, we have seen a nice reversal to the upside. We said that we are looking and expecting at least 3 waves to the upside back to the area of a former wave 4. This has occurred. We have tested 50 or retraced 50% retracement compared to previous 5 waves of decline. So this was a do and die zone. We have seen some sell-off, but it looks like a sell-off is only in 3 waves. Okay, so I would wait a little bit more to make sure if we get a 5th wave up. In such case, this rally would be in 5 waves then, which means that bottom has been formed here and that we are not completing wave B yet, so then we would expect something more complex. So regarding the future on crude oil for the next few, let's say for the next few weeks, we definitely need to see if we will get a 5 waves rally from this low, or maybe this whole wave C will be retraced. If we'll see a strong decline, that this would be confirmation that this was a correction or the finish and that we are going lower into this wave C of wave B of 2. Okay. I've also actually prepared this alternate scenario, since we don't know where market is trading, and actually this count is pretty clear here. It can be wave 1, wave 2, 5 subwaves up, as you can see here, within wave 3. Then, more importantly, it was a wave 4 pullback, and now we are reversing higher after this ABC decline. So, as I said, it will see a new high. Then clearly this lag should be treated as part of some larger 3-wave recovery. I would be looking for something like this. Okay, wave B would be expected to travel towards higher levels. Okay, traders, thank you very much for your attention, and I will catch you with new and more updates on our intraday page. Bye.